Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway. Let's get started on this Monday, August 25th, 2014. Right now, the markets are trading higher across the board. This should be no surprise to anyone. Remember, the markets are going to head up generally into the holiday weekend. And again, that's going to get a closing high above 2,000 on the S&P 500. The media is going to pump that. The Fed wants the media to pump that. And when I say Fed, I mean the Federal Reserve, obviously, as they try to stimulate the economy. Think about how much consumer spending is of this economy. It's like 70%. So the whole idea is if you can have the S&P close above a key level, and we already have the NASDAQ close above 4,500, Dow above 17,000. If you can get the S&P to close above that key level, you're going to get the media to pump it. Everyone's going to feel more profitable, more wealthy. 401ks are at highs, etc. They're going to go out and spend money over the long weekend. So that's what you're looking to do here. All right, so bottom line is expect that. We did pierce 2,000 on the S&P today, although we are trading about a point below. You can see, interestingly enough, we went into this key level. Now, you might say, where the heck did that line come from? I mean, where did this level achieve itself? Why do we have a trend line here? Valid question. I'm going to show you because it's going to blow you out of the water. All right, if you remember, literally months ago, I was talking about a major trend line that if we broke below, the markets would see some short-term selling. Well, this happens to be that trend line from months ago. And when I say months ago, this line goes all the way back. Look at this. All right, we're going to follow this. Let me zoom out so you can see a little easier as we zoom back. All right, so follow this line right here. All right, let's go all the way back here, all the way back. Look at this. Remember this line? Remember how we would get below it, but we'd never confirm to the downside? And then if I zoom further back, it comes down through this low here, this low right here. And if we go even further back, it's right along these lows. And then ultimately, when the market was below it, look at this. All right? I mean, look at this. From this pivot high going back to April to this May high. Okay? And all the way through as we were hammering underneath it and finally broke above. So we're now back to that line. That line just continues to keep itself up. And we hit that line today. Pulled back beautifully off of it. I talked about this to the intraday stock chat, and sure enough, just a beautiful thing here. So, in any case, 20 MA short-term minor resistance on the upside. I would expect the markets to close somewhere around here. Whether the S&P just gets above 2,000 for a close or not, I don't think that matters too much. I still think there's a little bit more upside in the short term, but it's not going to be endless. I think the S&P has another 10-15 points max on the upside from here, and then you probably start to look at some weakness next week by late next week. I don't know about early next week, but by late next week we should see some of that weakness come in. All right, couple other things to note here. The IBB is trading up nicely today, and this is the biotech ETF. The reason why this ETF is having a great day because Roche bought out Intermune ITMN for about a 35 or 36% premium. That's sending the biotech index right here higher nicely. And again, the reason why I bring this up is because you're getting very close to a key double top. Double top is going to be a good shorting opportunity, in my opinion. You should see a nice pullback on the IBB off of that level, all right? Could you pierce it? Sure, but overall you shouldn't go much higher than that level. So keep an eye on that. Couple other things that are making waves today. The IYT today only up 45 cents. Notice how you're stalling out right at its double top. So there's a lot of ETFs, a lot of stocks individually that are coming into major double tops, and you can see how they're stalling. They're having a lot of trouble. And that is something we want to pay attention to in my book because it does tell us about relative strength. The other thing that I think is worth noting is with the markets keep making these new highs, you have to look at the IWM, which is up today, but look at how far away from an all-time high it is on the IWM, which is the Russell. It's the small cap ETF. So again, just something there. We are above the moving averages short term, but I do think you're probably making a bearish pattern. If I flip to the weekly, we might be able to see it a little bit better on the weekly. Yeah, you can see this 1, 2, 3, 4 bar down move off of the highs, off the double top right there. And this actually looks to me to be a potential MA pattern. So you see this up, up, down is your M, and now you're making your A. So the question is, how high does this get? I would say you're probably very close to a high here around the 116.50 level, which is just about the high of the day today. That probably is short-term high. If we get a little bit above it in the coming days, the 118 level is the new level that you're watching. All right, so those are your two levels. But again, I would say an MA pattern is very likely here, and you won't see a higher high being put in here. More than likely, this is a double top, which is an M top, and the A is usually shorter than the M top. All right, so that's what we have there, how it could be here. JP Morgan Chase, nice day on JPM, up about 99 cents. It's a very strong day. Financials overall continue to outperform. JPM was up higher earlier today, has come back in, and now is floating back up as the markets float back up. Goldman Sachs having a great day too, although it's off its highs, up about $3.17. Beautiful little move there. Also, take a look at Apple. Apple continues to move up, although it is off its highs, but up another 30 cents. It got to 102.17, very close to a master level here. All right, anything between 102 and 103 is a master level, and in my opinion, you should see a top on Apple here. So we're getting close. We're getting close. I think patience is a major virtue here. If you have patience, you want to just wait a few more days and then slowly accumulate more and more on the short side. We should be good. Just like we went long a couple weeks ago beautifully. I bought the EWG, which is the Germany market, the DAX there. I picked up a couple other ones. We made money on those. Now we're going to just start flipping the boat again. And this is what we do here at InTheMoneyStocks.com, and it enables us to make money on all sides of the market. As long as you use the PPT methodology, our proprietary strategies, you can read this market so easily. You can read individual stocks so easily. A couple other things to note here, guys. We talked about Intermune being bought out today by Roche. That was a nice move as well. Also, Burger King and Tim Hortons. THI is Tim Hortons. Burger King in talks to potentially merge with Tim Hortons or buy them. And the whole idea here is Burger King wants to lower its taxes by moving to Canada. I believe Tim Hortons is in Canada. And, I mean, do you blame them? I mean, it's not the best. It stinks for all of us hardworking Americans because ultimately, guess who pays if there's a void in taxes from some other place? Guess who pays for that? Well, it's us. But, I mean, our government can't get their bag together. They can't get anything together. They can't do anything about it. They are in. I mean, we have a Congress and a politicians who are useless. I mean, they literally are useless. So I mean, I don't blame these companies for doing what they got to do to take matters into their own hands. It's a shame because ultimately it just hurts all of us hardworking Americans. But it is what it is, and hopefully at some point we can vote some people into office that actually do work instead of just sit on their you-know-whats and argue with each other. All right, a couple other things to note here. Disney, after a strong move, is putting in a potential short-term top. If we bring up Disney, you can see it is lows of the day. And the reason why I bring this to your attention is not that it's down on the day, but because it's had such a run and is now pulling back. All right, the other thing I want you to watch on the spiders here, guys, is this actually looks like a little bit of a fake print here, but you may have a doji top, or even potentially, if we take out that fake print, a topping tail, depending on where we close today. So keep a close eye on that as well. All right, guys, I think that's all for now. We will check back. I will give the update in the daily analysis video, which will be later. That'll be more in-depth with more information, with more trade alerts. And again, that's part of the Research Center at InTheMoneyStocks.com. Free trial here for the Research Center. Come join us. Profit for life. And again, join us here. Easy enough to do. And we'll give you trade alerts that make money. Take care.